The Monetary Policy Committee met on 2nd, 3rd and 4th June 2021 and took stock of the evolving macroeconomic and financial conditions as well as the impact of the COVID wave, the second wave of the COVID on the economy. Based on its assessment, the MPC voted unanimously to maintain status quo, that is keeping the policy repo rate unchanged at 4%. The MPC also decided unanimously to continue with the accommodative stance as long as necessary to revive and sustain growth on a durable basis and continue to mitigate the impact of COVID-19 on the economy while ensuring that inflation remains within the target going forward. The marginal standing facility, that is MSF rate, and the bank rate remain unchanged at 4.25%. The reverse repo rate also remains unchanged at 3.35%. Let me begin by setting out the underlying rationale of the MPC's decision. Provisional estimates of national income released by the National Statistics Office NSO on May 31st placed India's real GDP contraction at 7.3% for 2021, with GDP growth in fourth quarter at 1.6% year-on-year. In order to mitigate the adverse impact of the second wave of the pandemic on certain contact-intensive sectors, a separate liquidity window of rupees 15,000 crore is being opened till 31st March 2022 with tenors of up to 3 years at the repo rate. Under the scheme, banks can provide fresh lending support to hotels and restaurants, tourism, that is travel agents, tour operators and adventure and heritage facilities, aviation ancillary services, that is ground handling and supply chain, and other services that include private bus operators, car repair services, rent-a-car service providers, event or conference organizers, spa clinics, and beauty parlors and saloons. By way of an incentive, banks will be permitted to park their surplus liquidity up to a size of the loan book created under this scheme with the Reserve Bank under the reverse repo window at a rate which is 25 basis points lower than the repo rate, or termed in a different way, 40 basis points higher than the reverse repo rate.